Thank you, Kevin. Our speaker for this session is also Kevin Bolin, LUTCF, CIC, AIC. Kevin is an elite farmers insurance agent specializing in management insurance for common interest developments. Kevin is a graduate of UC Berkeley. He has contributed articles to Echo Journal on HOA insurance topics and served as chairperson for an Echo chapter. Kevin also served as president of his 214-door planned unit development. So he's well aware of the challenges facing volunteer board members. His insurance agency is in Novato, California. Kevin?
Okay, hi everyone again. And I really wanted to say wow before I do anything else. I can't believe how much useful information we've already learned from David Levy and Roy Helsing. And I sit on my board, so I was taking a lot of notes. I think I have about 12 pages of notes today. So my job in the next 30 minutes or so is to show all the board members out there how you really do have an insurance shield around you. So when you have to make decisions to manage your association, you know that even if you make a mistake, if you follow certain guidelines, your insurance policy will be there to protect you. And I think we're ready to go. So, and there's our first slide. Thank you. So what I'm going to do first is I'm going to give you a brief review of all the different types of insurances that you want to consider when you sit on a board. The first policy is called the Master Policy for Liability and Property. I think we all know that's really important to have. And my only point about this today, because of all the high construction costs in 2020, make sure you really have enough limits on your property policy. And the way you go about doing that is take all the square footage of your association, of all the buildings, including the clubhouse, and then take a look at the quality of your condominium. Is it an average or is it an upscale condominium? And then multiply that number by around $350 or $400 a square foot. And that's about how much coverage you should have. And my second tip is talk to a general contractor who actually rebuilds brand new buildings in your area. Because and the reason I'm emphasizing this point so much is I've come across a lot of associations in the last year that haven't really upgraded their coverage after the wildfires. So always keep that point in mind. The second coverage you see there is called the umbrella insurance policy. So an umbrella gives you more liability coverage if you need it. So for example, if as a board you decide, hey, you know what, we just installed some new tennis courts, maybe we should increase our liability coverage. You may only have 1 or 2 million underlying liability coverage in your master policy. So you can go out and buy an umbrella policy for $2, $3, $5, or $10, or even $25 million. And they're not that expensive. And the rule of thumb that I'll share with you is the bigger your association and the more amenities you have, like pools and tennis courts and fitness centers, the higher at risk you are for a liability claim. So keep that in mind when you look at your umbrella. We're going to skip over the D&O, or directors and officers, because we'll talk about that as our main topic today. Now we want to talk about fidelity insurance. So fidelity policy, as many of you know, is a crime policy. So if anybody were to embezzle funds from the association, it could be a manager, it could be a board member, it could be a volunteer. You want to have enough coverage in your fidelity policy to make sure that the insurance company who stands ready is going to write you that check within a week or two and get you back up and running again. And one of the things I often see is that the fidelity limit has not been upgraded in a couple of years. So according to David Sterling, Civil Code 5806, your fidelity limit should always be 1 year reserves plus 3 months of regular dues. So keep that in mind when you're looking at your fidelity policy. And the last tip I'll give you, if you show up at your next board meeting and you have every board member driving up in a brand new Mercedes, and they also happen to be remodeling the home this year, that may be a clue that there's some embezzlement going on. Just kidding. Okay, so the next coverage we want to talk about, no, we're still on the same slide there. If we can go back, thank you, Hannah. Earthquake insurance. Earthquake insurance is a really difficult decision for a lot of associations for one reason: the premiums are so high. But I would strongly recommend that every board consider it because, as the seismologists like to tell us, that it's not a question of if, it's only a question of when. And we haven't had a major earthquake since, I think, 1994 on the Northridge quake. And for $25 or $30 more per member, you really do want to consider earthquake insurance. If you decide not to, that's great. But what I typically discover is a lot of boards don't even talk about it. And I think you really have a fiduciary duty for all your members and yourselves to consider getting earthquake insurance, okay? And then pollution liability, if your association is near the San Francisco Bay and you're concerned about your sewer lines collapsing and spilling raw sewage into the San Francisco Bay, you really want to consider getting a pollution liability policy. Okay, now I saved the best for last. So I started selling and managing insurance about 5 years ago, and I quickly discovered that a lot of the smaller associations, for whatever reason, did not have a workers' compensation policy in place. And I think this is a mistake for two reasons. First, imagine if you're a board member like Kevin. For example, a week ago, I walked around with my arborist and I saw this big, beautiful plant that he had marked to get rid of. So I asked him, why do you want to get rid of this big, beautiful plant? And the arborist separated the exterior of the plant. He reached his arm in, squeezed, and he brought out a bunch of rotting twigs and branches. And he says, Kevin, this is why. It's beautiful on the outside, it's ugly on the inside, and it's rotting, and it's adjacent to one of your buildings. So I totally got it. However, Kevin, being the hands-on board member that I am, I reached my hand in, I squeezed, and guess what I got when I pulled my hand out? I got a major splinter right on the palm of my hand. It's still there. It hurts. So the reason I'm sharing this story with everyone is that it really drove home the point to me how important it is to have a workers' compensation policy in place, because this policy will protect you if you're a board member or an appointed volunteer, and as you're walking around the common area, you actually sustain an injury. Imagine if I had broken my leg or my hip. I don't have a disability policy, but I would have a workers' compensation policy in place, and guess what? It's worth $1 million. And here's the second reason I recommend it, besides obviously protecting yourself. The second reason is it only costs between $350 or $550 a year to purchase a workers' compensation policy for board members and appointed volunteers. So to me, that's a no-brainer. I won't say anything more about it, but I really want to strongly encourage every association, no matter what size you are, to get a workers' compensation insurance policy. Okay, next slide. Thank you. All right, so now we're going to transition into directors and officers insurance, our main topic today. So here is a list of all the people that are insured under the insurance policy. Obviously, the officers and the directors, appointed committee volunteers, employees, and the manager and their firm. I underlined the word appointed because you have to make sure if someone is doing gardening or someone is volunteering to pick up, garbage that's strewn in the HOA, they really should be listed as an appointed volunteer if you want them to. Because if they're listed as an appointed volunteer, they're going to have insurance rights, and they'll even have workers' compensation policy working for them as well. So just be aware of that. All right, so here's all the insured persons. I think we're ready for the next slide. So what I want to do is I want to share with everyone today the legal foundation upon which your directors and officers policy is in place. This will be a little bit more complicated for the next couple of slides, but bear with me because when I start to share with you some of the other protections you have in place, and at the end, we're going to talk about some real life cases. I think that'll really make it more clear. But let me read this to you real briefly. The insurance company will pay for the loss which you become legally obligated to pay as a result of a claim for any wrongful acts committed by any insured persons. The wrongful act must be committed in the conduct of management duties for the association. We will have the right and the duty to defend you against any such claims, albeit the allegations are false, fraudulent, or groundless. Okay, that sounds great. The insurance company is going to make the agreement, they're going to protect you. But if I stopped right here and I asked you, well, what type of claims are they going to pay? You probably wouldn't know, right? But if you noticed, I highlighted two key words there, wrongful acts. What is a wrongful act? Well, let's look at the next slide and find out. So as board members, you're always making decisions. And you could make a bad decision. But as long as you follow, again, certain guidelines, you're going to be protected. And that's the good news I'm going to share with everyone today. So here's what the insurance companies will typically define a wrongful act as. And this is true across the country, not just California. A wrongful act is an alleged act, an error, an omission, a misstatement or misleading statement, neglect or breach of duty, committed by one or more named insureds, we know who those are now, arising solely out of their management duties for the association. And this is a very broad definition, which actually, the broader your definition of insurance, the more coverage you have, the more wide variety of claims that you're insured for, which is a very good thing. So now you have a better understanding of what a wrongful act is. So how about, let me give you an example of an error. Let's say the board gets together, they realize hardly anybody is using the tennis courts. And they look at the CC&Rs and there's nothing even mentioned about it. The CC&Rs are silent about whether or not they could get rid of the tennis courts. So they decide to go ahead and do so. Well, guess what? A couple of homeowners like to use those tennis courts. And the board actually made an error. They didn't look at the CC&Rs carefully. And if your CC&Rs are silent, you can't take away an amenity. I know every seasoned HOA manager knows this one. So it's really important to know that. So that would be an example of an error. An omission is something that you should have done that you didn't do. So an example of an omission. Let's say that a homeowner is complaining about a tree limb that's hanging over his carport. But this person complains about everything. They even complain about St. Paddy's Day coming up. So as a board, you said, we can put this off. He complains about everything. Sure enough, that branch were to fall, crash into the carport. Not only could that owner, ask the association to pay because he warned you about it, they could actually file a D&O claim. The good news is your insurance will protect you. The bad news is you're going to have to pay probably a deductible, and your insurance rates could possibly go up the next year. So anyway, that's a good example of an omission and an error. And how about a misstatement? Well, I think David Levy gave us some good examples today. How about if I told all the owners during a meeting that, you know what, our finances are in great shape. We're like the U.S. Treasury. We have so much money. We're not going to raise dues for years. Whoops. I don't think any board member would make that statement, but it's a good example of what a misstatement or misleading statement could be. And then finally, neglect or breach of duty. We all have a duty to keep the best interest of the association in mind. So I read a case just last night when I was doing the research for my talk. A board member decided to chop down a tree because it was preventing him from seeing the bay where he lived. Well, was this a breach of duty? Was he keeping the best interest of the association in mind? I don't think so. So that's an example of a breach of a duty. Okay, let's move on to the next slide. So guess what? I shared with you some good news so far, that your directors and officers policy will protect you if you make a decision. I want to share with you what's not covered under some, not all, but some D&O policies. And I'm going to highlight two of them. There's a lot here, but I'm just going to highlight two because they're going to be one of the key takeaways today. I have discovered in the last couple of years, since I began to look at homeowner associations, directors and officers policies, that 30 to 40% of them out there do not cover first or third party discrimination claims. And this represents a big gap in your coverage. As you'll see later, I'm going to share with you a real case that occurred. A first party is the homeowner or the volunteer or the manager. A third party would be everybody else. For example, a tenant, their guest, or even a vendor. So if, for example, I'll give you a good example. Let's say a homeowner felt that she was being discriminated against based on race or age or color or sex or disability. It could be frivolous. I mean, we never see a frivolous lawsuit, do we? It could be a frivolous lawsuit. But guess what? You're going to have to retain counsel to defend you. And this has happened more often. In fact, I remember in our January ECHO legal seminar, we had a good attorney up there by the name of Mark Guthuse, and he actually talked about how important it is to have discrimination coverage in your D&O. I was actually cheering when he said that. So when you my takeaway here is when you look at your D&O coverage on renewal for your insurance, you want to make sure that that coverage is in there. So don't hesitate to ask your manager to find out for you or your broker directly. Okay, there's a few other coverages. I'm going to skip over those for now. We can handle those in the Q&A if anybody has any questions. I wanted to talk about the last one here. Watch out for this one below. So if you have employees in your association, you really want to make sure you have what's called employment practices liability coverage. Because a lot of employees today know that if they get fired, they can find some attorney who will come back and say, you know, you fired this person because of their race, their age, their color, because you just didn't like them. And before you know it, you've got another lawsuit on your hand or a claim. And if you don't have this coverage in your D&O, the association has to look to the reserve funds, yikes, or operating funds to pay the bills. Or even worse, a special assessment, which nobody wants. So if you only remember two things today, I want you to remember to ask about your D&O coverage, and do they have first and third party discrimination coverage, and do they have employers practices liability coverage inside the D&O? Okay, all right, next slide. Thank you, Hannah. Okay, now I want to share some more good news with you. So you have coverage to make a decision, make a bad decision, make a mistake. But under California Civil Code 5800, this is Davis Sterling, you actually have statutory support for making your decisions. And I want to read this to you because I think it's really important. Okay, so under Davis Sterling Civil Code 5800, it states, a volunteer officer or volunteer director who manages a community interest development that is residential or mixed use shall not be held personally liable in excess of the coverage of insurance to any person who suffers injury, including but not limited to bodily injury, property damage, emotional distress, and wrongful death, or as a result of a tortious act or omission. A tort is a civil wrong or a wrongful act in which some other party sustains, damage or allegedly sustains, damage or bodily injury. So this is actually on the books with Davis Sterling. I was really happy to see this again because I serve on my board, and it's really strong legal protection. What the California legislature is basically saying is, you know what? We understand you're volunteers. We understand you have to manage an association. We know that you can make mistakes, but as long as you follow 4 criterion, we are going to protect you under statutory law. So let's take a look at what those 4 criterion are. All right, so whatever the mistake was, the act or omission, it has to be within the scope of the officer or director's association duties. The act or omission was performed in good faith. The act or omission was not willful, wanton, or grossly negligent. And at the time of the incident or when the claim was made, there was 2 insurance policies in place, a general liability policy and a D&O policy. And their limits were if you had less than 100 units, at least $500,000 in coverage. If you have over 100 units, at least $1 million in coverage. Keep in mind, those limits are really too low. These are state minimums. But there you have it. So if I were to interpret this and look at this Civil Code 5800, what I understand it to mean is that as long as you're keeping the association's best interests in mind, as long as you're acting in good faith, and as long as you do your due diligence, consult with experts, and follow what's known as the business judgment rule, then you're going to have some statutory support. In other words, the courts are going to look more favorably upon the board, and they're going to protect you, which is good to know. So now you have not only one shield, your insurance, you have 2. Okay, next slide, please. I have some more good news for everybody. And I actually discovered this myself when I was researching for my talk just last week. There is something in California known as the California Doctrine of Judicial Deference to HOA boards for ordinary maintenance duties. With the Davis Sterling, it's statutory law. With the California Doctrine of Judicial Deference, it's case law. And this also now you have case law that's going to support you. So the California Supreme Court ruled that the court shall defer to the board's authority when making a decision using sound business judgment. What is sound business judgment? Once again, keeping the best interest of the association and the membership in mind. Consult with experts. Do your due diligence. Discuss it as board members. Be engaged. Make a good decision. Get a couple of bids for a roofing company so you hire the best and most qualified vendor. Research and listen to the experts. Review and discuss known facts, and then work in good faith. So this is really good news for me and for all the other board members out there, because we have insurance policy in place, we have statutory law, and we have case study law, which is also a precedent. So the courts really want to let the board make their own decisions. And as long as you stay within these 4 criteria that I mentioned earlier, you'll be fine. Okay, thank you for that. And then next slide. All right, so now what I want to do is share with you some actual cases, some real lawsuits that have taken place in the last 2 to 3 years. And this will give you some real concrete examples of how your D&O can protect you. So back in 2018, I actually had an association up in Sonoma County, and one of the board members was acting unruly. And as a result, because she was acting so unruly and so abusive verbally, they had to ban her from the meeting. And what happened was she didn't like it, so she retained counsel and she sued. And she sued for racial discrimination, handicap discrimination, and age discrimination. And the insurance company, which was my company at the time, had discrimination coverage inside the D&O, which I mentioned earlier is so important to have. So we defended, and we proved the board did everything right. You know, I've had the fortune of working with a lot of very competent HOA managers in our industry. And this particular manager had a file about 12.5 inches high on this particular situation and issue because of, you know, the homeowner who was acting defiantly and unreasonably for so long. So my attorneys were able to use that documentation, and they won. Within a year, it was proven that the board acted within the authority of their CC&Rs and did nothing wrong. But guess what? It cost my company $32,000. So if you don't have this discrimination coverage in your D&O and your association, that money is going to have to come out of operating funds, reserves, or special assessments. So that's why it's important. So this is a really good story, and this just happened a couple of years ago. Okay, let's take a look at another case. Okay, some of you may be familiar with this because I've heard our attorneys talk about this at our good ECHO meetings in the past. Lambden versus LaJolla Shores Condominium Association. This is where the doctrine of judicial deference was cited by the judges. So an owner sued the individual board members, which is kind of scary to see your name on a lawsuit, and they also sued the HOA for termite infestation. The owner wanted a major fumigation and to tent the building, but the board chose to spot treat the termites. The owner sued for loss of market value and other reasons. The court decided the board had applied sound business judgment in spot treating for termites in lieu of fumigating, despite the fact that the termites were never eradicated. So apparently what happened in this case, the board decided to spot treat. And it might have been, in retrospect, a bad decision, because about a year later, a lot more termites were found in the building, and it was really a termite buffet that year. However, the courts in this lawsuit decided in favor of the board of directors because they followed the good business judgment. They talked to 1 or 2 pest control companies, and they said, I think we can spot treat these and we can take care of this, termite infestation. I don't think we need to tent the entire building. And as a result of that, the board of directors, they won. So that's another way that you have support within the California court system. Okay, next slide. This is one of my favorites because I used to play tennis when I was a younger guy, and I could actually hit the ball when I was able to swing the club. But anyway, a board decided to remove tennis courts, and there was nothing in the CC&Rs that actually addressed it. And nobody was really using the courts, for months at a time. And they were costing money to maintain, and they were worried about teenagers coming in as a hazard, which they were, and they were hanging out there, and they weren't really playing tennis. They were just hanging out, being teenagers, and they were smoking and drinking too. So the board made a decision to get rid of the tennis courts. Well, it turns out that there were 3 homeowners out of 150 that liked to play tennis once in a while, and they sued. And they sued because they weren't consulted. There was no vote of the membership. And guess what? They were right. And I learned after talking to one of our claims professionals just a week ago that if your CC&Rs or our CC&Rs, thinking of my own association, if they're silent on a particular issue, you cannot take away an amenity, and you cannot deal with a particular issue. You need to go look and get a vote of the entire or 2/3 of the membership to get your majority to make that decision. So that's a good example, again, where your D&O policy was able to come in and pay all the bills to do it. The last part of this story, like, remember Paul Harvey? If you've been around long like me, you remember Paul Harvey always had the rest of the story. Well, after the board had to reinstall and pay for the tennis courts to be reinstalled again and built from the ground up, guess who got assessed for the cost of that? All the homeowners, including the ones that complained about it. So there you go. Okay. All right, so my key takeaways today, and then we can open up for Q&A. I'm looking forward to that. Always remember to have discrimination coverage in your D&O policy. Write it down, and don't forget to ask that question. Always remember to have, if you have employees in your association, you want to have EPLI coverage. Breach of contract, make sure you have that coverage in there. That's a big one as well. Matters of insurance, we didn't really talk about this one, but it means that as a board, you have a duty, a fiduciary duty, to buy the right amount and the right type of insurance. And a homeowner could actually come back and sue you one day if you didn't do your job diligently. So make sure your D&O policy covers matters of insurance, because I've discovered a lot of companies, and some of them are brand name companies, they don't cover that type of claim. So again, you want a good comprehensive D&O policy that's going to protect you. And then the last key takeaway is get a workers' compensation policy, because if you're like Kevin, you're going to need it. And I want to close today by thanking all the board members and everyone else, all the other HOA professionals, for being here today. It's a Saturday. We all dedicated our time to learn. So I want everybody to follow after me. Please raise your right hand. Please raise your right hand now. And repeat after me. I solemnly swear to pat myself on the back 1, 2, 3, 4, 5 times for dedicating my Saturday to learning and growing so I can become a better board member to serve my community. Okay, thank you, everyone.
Thank you, Kevin. We're now going to begin the Ask the Expert Q&A session, and sponsored by CIT Bank and Homeowners Management Company.
Great. Kevin, I have a number of questions for you. Does the workers' compensation policy also cover vendors who do not have a workers' comp coverage for their employees?
Yeah, that is a great question, and it's another reason why you do want to have a policy in place. Thank you, whoever asked that question, because if you were to hire a vendor and they failed to have workers' compensation insurance, their employee could actually sue you. And if you have that workers' compensation policy in place, it'll be there to protect you.
Great.
Great question.
Yep. And now's your time for the participants to put their questions in the question box. We will be taking those. Our buildings are on pylons sunk into the bedrock. Wow. The units are above ground. Insurers always consider us a 3-level, but only the furnaces and water heaters are on the bottom level. Is there any way to resolve this to get lower rates?
So are you saying that your rates are higher because of the type of construction that you have? If you are saying that, then I would hate to be a bearer of bad news, but probably not. Insurance companies are always concerned about any type of structure that has pylons, either cement or wooden pylons or beams supporting them, because they're worried about the risk of fire. Because if a fire starts, it can actually burn a structure much faster if there's an empty space under the building. And that's why they do typically charge higher rates for that.
Okay. Thank you, Kevin. Here's the next question from Marion. We are a townhouse condo association. Some of the units are in the FEMA floodplain. Can the HOA get flood insurance? Homeowners have gotten it, but some banks are telling them the HOA must have it.
Well, you can absolutely purchase flood insurance today in California. It's available, and you can go through FEMA, and there's also other markets, which I'd encourage you to consider, called Lloyd's of London. And very often, we look at both, and we've discovered that sometimes FEMA is not the least expensive, and sometimes the coverage is not the best as well. So yeah, you can definitely get that type of coverage. It's smart to get it. If you're in the AE zone or close to that zone, then you're definitely at risk of a flood at some point in time.
Okay, and the HOA can get that insurance?
Absolutely, yeah. You can buy a master policy of flood insurance. In fact, we have it on our association because we're literally about 30 yards from a major creek in our city of Novato.
Okay, that sounds good. Yeah, one of our attendees isn't sure what being silent means with respect to your CC&Rs. You mentioned CC&Rs are silent. Can you explain that?
Yes, thank you. Another great question. So when I say silent, I mean there's nothing in the CC&Rs that talks about whether or not the board had authority to remove any amenity like a tennis court or a basketball court or close down a pool or a spa. And because when I say silent, that means there was nothing in there. There was no language you can or you cannot do it, or it's going to take 2/3 a vote of the membership to get it done. So that's what I mean by silent. I hope that answers the question.
Yep, and I think the contrary of that would be explicit, so it would be actually written in there or black letters. So those are the terms we use. And sometimes you need to do that for the contracts and make sure that it is in there. Okay, attendees, let's see. Our board of directors has funded large projects where required permits weren't pulled, e.g. new roofs, etc. It won't seek them out. It won't seek them now. Can our carrier deny coverage if the claim is made when required permits are missing?
So I'm not sure I understand the question here, but
so what they've done is they've done some major work in their HOA and a new roof, let's say, and the new roof they didn't go out and get the permit to replace the roof. It could be a small association and they did it themselves. What happens if there's damage to the roof, or a tree falls on it and puts a hole in it? Can the insurance company deny the claim because they didn't pull the roof and have it inspected?
No, I would, you have to be careful when you say yes or no. Is an insurance company going to pay a claim? Because, frankly, they have to investigate all the details of what occurred. But my honest opinion would be that no, the insurance company would still have to pay this claim, because if they fail to pull permits, they can be fined by the city. But if they can show that when they installed the roof, they had a competent contractor do it, it was installed using good normal construction methods, then the insurance company really has to pay that claim because the HOA is paying a premium for that coverage.
Okay, well here's another really good question, and I've had this one before about plants that have or trees that drop oak balls or dangerous balls on the ground, an amber tree in this particular liquid amber tree in this particular case, and the balls are on the ground and people are walking. This is in an active 55 community. They step on the balls or the tree, whatever is dropping, and they end up on the ground and they break an arm. Is the HOA responsible for that? Are they liable for that?
Well, that's a really good question too. I love these questions today. I would have to say, in my opinion again, that yes, more than likely the association would be held liable because if they were aware of the problem and they didn't do anything, that's an omission. like we saw earlier in the insuring agreement. They were notified, hey, this is dangerous, it's a hazard. A hazard by insurance definition is any potential for a loss to occur. And by those plant bulbs being on there, obviously it's a trip and fall hazard. So they really have a fiduciary duty to protect all the membership as well as guests that come on the property. So I would think that one is going to come under your general liability coverage, just like a slip and a fall. And there's definitely going to be some, some money paid out if that occurred.
So here's a good one in today's world. The rules, the FHA rules have changed recently, and HOAs are required to intervene in some disputes about discrimination or harassment in a community. What type of liability would they need to have to protect themselves, the HOA?
Yeah, that's another great question, and it is true that the Federal Housing Authority actually now has some language out there that applies to homeowner associations, that if a board of directors learns about some type of discrimination going on between neighbors, they do have a duty to try to mitigate that or stop it. They need to send a letter, they need to knock on the door to the homeowner and say, here, somebody is saying this, is it true? We don't know, but can you come in? Let's have a hearing, let's talk about it. The board is really at risk if they do nothing about it. But if they take these actions, they don't necessarily have to be able to stop, the discrimination, because that's between two neighbors, and we cannot always control the behavior of a homeowner. But the board does have to show that they took proactive action to stop it. And to answer your question, that is what I was talking about earlier today. One of my key takeaways, you want to make sure you have that discrimination coverage in your directors and officers policy. And that's where you'll find it. And keep in mind that not all D&O policies are the same, and not all insurance companies will offer that. Many companies, when I say many, I mean about 40% that I've discovered in California, which is why this is my key takeaway. About 40% of the insurance companies in their D&O, they actually have an exclusion right there in writing saying, sorry, we don't cover discrimination lawsuits. So that's where you find it, in your directors and officers.
Okay. So here's a corollary to that. If a property management company has an employee who's being discriminating against a homeowner, or maybe even just a resident, or it could be a non-homeowner resident, what do you do to prevent that? What's your next step with respect to that?
Well, that's a good question. If I were on the board, I would be talking to the president of that management company or the owner and saying, let's have a meeting Monday morning at 10 o'clock, because I'm hearing allegations about one of your managers. And let's find out if the allegations are spurious or are they real. And then if they are real, let's do something about it. And even if they are false, what can we do about it? Well, let's talk to the homeowner and see, get their perspective on things. If that particular homeowner would to sue the board, saying, you know what, I've been telling you about this manager, they discriminated against me because I'm whatever. The board does nothing, the homeowner then sues. If you have discrimination coverage in your directors and officers policy, then you're going to have legal defense and indemnification inside your policy. In other words, your company is going to pay the bill, which is good for the HOA. Now, going back to the management firm, we also offer D&O insurance for managers, and some D&O policies for managers, or E&O policies for management firms don't cover discrimination claims. So the management firm might end up being the loser in this one if indeed it is true, if it's not just allegations.
So let's just go back one step here. You mentioned a couple of acronyms, D&O and E&O. I think E&O is new. Can you just tell us what those are?
Yeah, sorry about that. I'm an insurance geek, and my jargon just comes out. So D&O means directors and officers insurance. E&O means errors and omission insurance. So every CPA, every attorney, every insurance agent, every architect, every engineer has an insurance policy called E&O. So if we make an error or if we make an omission, it's okay, because we're going to have insurance behind us to pay the bill. We're all human out there. All professionals are human. And that's why insurance is there, to protect us if we make a mistake. So E&O means error and omission insurance.
So D&O and E&O are different types of policies. Do you recommend that you get both of them if you're an HOA?
No. A D&O policy is sufficient, and it's very similar to an E&O. And if you're an association, all you need to purchase and have is a D&O or directors and officers policy. If you're an insurance agent, an architect, an engineer, an attorney, a CPA, the type of policy that these professionals have is called E&O, errors and omissions. It's just a different name.
Okay. So with respect to the pandemic, okay, the weather's warming up or will be warming up soon, and we're looking at pools reopening. And a lot of HOAs find that their D&O is not going to cover damage or infections caused by or related to pool activities, or we could say more generally, the amenities. It could be a weight room that you have, or equestrian stable, or walking trails. So what's going to happen here in a couple months is people are going to start asking boards about opening the pools again. What do we do about that?
Another great question. About a week ago, I was taking a walk, and there was a young couple, two young couples actually, with young kids. And they know that I'm the president of my association. So they said, Kevin, you got to open the pools this year. And my heart went out to them. But I went back to my office, and I emailed a couple of board members. We talked a little bit about it. And because in our county, in Marin County, you can still really not open any pools, public pools. And they advocate against it because even though it looks like we're trending downward in the COVID-19, we're still not out of the woods yet. So our association, we decided not to open our pools, and we had a good chat about this in my chat room earlier this morning. And from what I hear in Santa Clara County and other counties, it's the same way. It's just not safe to open the pools. It's not safe to open your fitness centers and your spas and everything else. And I would think we just have to not tighten our belts. We just have to be disciplined. We want to get through this, and it's just not worth the chance. Heaven forbid someone actually were to get COVID from our pool.
Responsibilities. Does that give you any protection?
Say that again. Homeowner waiver responsibilities?
A waiver of responsibility. So say the homeowner and their kids want to use the pool. Is it a way to protect the HOA if you have them sign a waiver of responsibility saying, we're not going to hold the HOA harmless. I mean, we're going to hold the HOA harmless, rather.
Okay, that question is above my pay grade.
Okay.
You would really want to talk to an attorney about that. We have a lot of good ECHO attorneys, Glenn Youngling, David Feingold, Mark Gutthews, Barbara Zimmerman, the ones that I work with. That one's got to go to the attorney.
Okay, that sounds good. I know another one, and I don't know if you know the answer to this, may be a legal question, but if a person has a disability and they use the pool to exercise, is that covered under the policy? Should we let people into the pools that need it for exercise?
Yeah, that's a tough question. I do know that if a disabled person wants to, have a special equipment installed in the pool, you really want to accommodate somebody, but if the rest of the membership can't use the pool, I don't think it's probably fair to let one person use it. But again, this is a tough question. I would want to have a really good vetting of this question, discuss it with my board members, and even consult our attorney about it. We want to help our disabled people in our community for sure. And if they're the only person using the pool, I don't see any risk of COVID. Thinking out loud as we're talking about this issue, I would just keep an open mind and I would go about it that way. Use the business judgment of the board members with the consultation of the attorney to make sure you make the right decision.
Yeah, there are a number of questions here about pricing and what's the cost range for insurance and earthquake insurance, et cetera. I think we'll just have those. We'll push off those questions, and I would suggest that you go into the table and talk to Kevin directly on that one, or contact any one of our insurance professionals at ECHO's professional directory online, and they'll be able to talk to you about costs. I really don't want to get into that foray right now.
Yeah, I'll be hanging around for a while. So
okay, that'd be great. If a board of directors is presented with photographic or other direct evidence of serious damage or problems and doesn't investigate that matter or seek an expert professional opinion, are they still acting in good faith?
That's an easy one. No, they're not. And that again goes back to the insuring agreement. If the board member makes an error or an omission is something you should have done and you didn't. I know I heard a few months ago about a case in an association in Southern California where, unfortunately, the board was made aware of a dangerous tree, an oak tree, and sure enough, the limb fell, and sadly, I'm surprised I'm getting choked up about this, but sadly, it was a fatality, and the board is definitely going to pay the price, and that is. I wouldn't say it's acting in bad faith. That's not the right way to describe it. But obviously, they dropped the ball. They made an omission. They didn't do something they should have done. And my association just spent a lot of money this year in making sure that we created defensible space, and we got rid of a lot of limbs that were dangerous to pedestrians. So that's one of the fundamental duties I think we all share as board members, to make sure that our community is safe.
Yeah, I get a lot of questions from homeowners about that. And so for the board members out there, make sure you respond quickly to any complaints of this nature and do an investigation. It's very important. One question here is a quick one. How much insurance coverage per building per square foot? What's your suggestion?
It's very interesting, because if you have a single family home today, you need at least $450 or $500 a square foot, because my agency, I've been around for 22 years and we insure about 800 homes and landlord properties. If you're in an association, you benefit a little bit because you typically share, and I'm talking about condominium associations versus a planned unit development. Condominium associations, you share common walls and common roofs. And if you're going to have a major rebuild, you're going to have the benefit of economies of scale. In other words, a contractor can order a lot of sheetrock, a lot of wood, a lot of materials. And if it's a minor fire, that's going to, not really cost that much, then you're okay. What you're really concerned about is that major wildfire that we've incurred in the last couple of years. So my recommendation is probably somewhere between $350 and $400 a square foot for an average community. And by that, I mean, I know a few homeowner associations in San Francisco in the Pacific Heights that are on top of a huge hill, and they're 2,500 square feet per homeowner. In that situation, and in San Francisco, you probably need more like $600 or $700 per square foot. But again, I am not a general contractor, so I always recommend you consult a good general contractor, because they're the experts when it comes to replacement cost. And I always encourage my clients to get a bid or have a general contractor come out and write up exactly what he or she thinks it would cost to rebuild.
So we're getting close to the quarter hour here, 11:45, and we'll be going into our tables in just a minute. But let me ask you very quickly, should you get workers' compensation insurance if you only have volunteers do the work around the building?
Absolutely. Why not? Because it'll give them $1 million in protection in case they break a leg, a hip, or an arm. Mm-hmm. And let's say a limb were to fall on them, right? And seriously injure them. Most people can't afford disability insurance, and most people don't have it. So if you have a workers' compensation policy in place, it's going to protect those volunteers and the board members. And for $350 or $500 a year, and I think it's a no-brainer.
So Kevin, here's a question from someone from Southern California. if you're in a mid-rise or high-rise condominium complex, and you have an earthquake and the building falls down, or it's considered uninhabitable, how do you rebuild if you don't have earthquake insurance? How do you protect against that? And how do you protect against the loss of the personal property?
So if you don't have earthquake insurance on the master policy, you're up a creek without a paddle. You're out of luck. And if you looked at the CC&Rs, there always is the language in there pertaining to dissolving the entire association. So that's a big problem there. That the only solution to that problem is to have earthquake insurance. Secondly, though, if you wanted to recover your personal property, every homeowner in an association can purchase their own individual earthquake insurance policy. In that case, they would have coverage for their own home, personal property, and even some money to live somewhere else for a few months while they found a new place to live.
So would the homeowners have action against the board of directors and then the DNO?
Oh, I see. Yeah, that's a good question. You would have to look to the CC&Rs, because most CC&Rs that I read, they never require that the board have earthquake insurance. I can tell you right off the bat, 90% of the ones I've seen in 5 years, and that's probably 100 CC&Rs I've read, they typically say you've got to have property liability, D&O insurance, fidelity insurance, but they don't require earthquake insurance. And that's a big difference there. However, if your CC&Rs actually said we require the board to go out and get earthquake insurance, then that's a different kettle of fish.
Okay.
Under that circumstance, there certainly could be a lawsuit.